All right. Hey, Group A, welcome to our first meeting. It's good to see everybody. So this is our 19th of January 2022 meeting. And just to confirm one more time, you can all see my screen, right?
Yeah.
Yes.
All right, awesome. It's good to see everyone here. Thank you for tuning in. And we're going to get right to it because we got a lot of stuff to cover for this meeting. Just the standard disclaimer, PCT is not an investment advisory service or a registered investment advisor or a broker-dealer. No content published as part of the P Capital Trading Room and its website constitutes a recommendation, and none of the creators or providers of our services or their affiliates will advise you personally. So getting on with business. I think I've introduced myself to all of you now, so I'm not going to spend a lot of time on this slide, but this is me, John, before I had a beard. I swear to you, I am the same John with or without a beard. I just prefer in the winter, lately into wintertime when it gets cold to have a beard. Let me tell you about our upcoming schedule. So I want us all to get into the idea that for what is upcoming in the schedule, we should check the dashboard. So I am going to go to the P Capital dashboard right now. As soon as I figure out how to get this zoom out of the way. Hold up. And I'm going to pull it over to the screen we are sharing. Come on now. Come on, browser. All right. Can we all see that? So the way to figure out what is happening in P Capital Trading is to go to the website and go to the dashboard. I am trying to get out of the practice of sending you guys dates and times by email or by Slack because I usually screw it up. So the best way to figure out what's going on is to go to the dashboard. And for most events, go to Trader's Home and go to the dashboard, which is the default setting for Trader's Home, and scroll down. And for whatever month we're in, you can see what's going on. So for the next couple of events that are coming up, we have Monday, January 24th at 7 p.m., Handling the Pressure Involved in Trading by Dr. Reed. And on Tuesday, January 25th, the following day, Developing Your Money and Risk Management by Mike. So this follows our normal schedule of events. So if I scroll up a little bit, you'll see the normal schedule of events is Monday at 7, there's a webinar. And that could be by me, that could be by Peter, that could be by Simon, or Thor, or a couple other people. But that is the normal event for Monday. It's Monday at 7 p.m. Eastern Time in the U.S. And that's why you see that for next week on the 24th on Monday. That's Dr. Reed at 7 p.m. And then next normal schedule of events is Tuesday at 5 p.m. Eastern. That's a trade book meeting. It's a meeting specifically designed to talk about creating your trade book, and those are led by Mike every Monday by Mike at 5 p.m. So you see the 25th of January, there you go, Developing Your Money and Risk Management by Mike. And then the next standard meeting after that is on Wednesday at 11 a.m. Eastern. That's I call it the all PCT meeting. It's everybody in P Capital Trading comes in, and that's the meeting with Andrew, Norm to kind of kick it off, and then usually Dima and Eamon will kind of take the rest of that meeting. Then, depending on what group you're in, like tonight or this evening, we're in the Group A meeting in Zoom. You know, these are unique. These are Zoom meetings as opposed to like the meeting room meetings for P Capital. Group A is at 4:30 on Wednesday, and Group B is at 4:30 on Thursday. That's the normal chain of events, and you can see it down here in the calendar. And if you can click to February and March and April. Occasionally, there will be changes in the calendar, and when there are, if ever there's a change to this normal chain of events, as soon as someone tells me, I will email you and I will tell you in Slack. And that's what I did this week. So Mike was going to give his trade book meeting yesterday at 5, which would be according to the standard calendar. Here you go, Tuesday at 5. But not to get into it too much, but there's a COVID thing, and there's no bus drivers for his daughter, and yada yada. Mike had to drive his daughter somewhere, so Mike had to change it to 4:15. As soon as I heard that, I emailed and Slack messaged you guys, and we changed it on the website as fast as we could. So just as much as we can, we don't want to change the standard course of events. We want to keep it standard so like that you guys, I know that you guys adjust your lives and your work schedules to adhere to this, but occasionally there is a time we have to change it. As soon as I know I'm aware of that, I'll let you guys know, and we'll change the website as well. So anyway, not to beat a dead horse, but I hope that makes sense. There we go. I will email Slack any last minute changes. All right. Moving ahead. This is a roadmap that we present for PCT. It's just kind of it's like a rough roadmap of where we think we are in our journey. Now, everyone's journey is a little bit different, and I'll talk about this more as we go forward in this meeting. But some people are starting out as brand new traders, and some people are starting out as traders who have a bit of experience and they're a bit ahead in their journey. But this is a roadmap that kind of defines like something in the middle between the beginner trader and the experienced trader. But it's just a way for us to check up on where we are. And you can see there's these different stages: explore, build, practice, refine, execute at the end. It's just a way to kind of check up on where we are. And you can see we're in the explore stage at the moment, where we're trying to do these things here, like learn technologies, set up DOS, set up hotkeys. That's kind of where we all are at the moment. So we kind of have those items checked off. I sent a survey out to everybody, if you recall, and I asked some questions about everyone, and I want to give some results here, just so you understand the group that you're working amongst, right? So you don't, a lot of this is to kind of show that you should not feel alone. So the first question was, I consider myself an experienced equities trader, and over a third of people disagree. They don't consider themselves experienced equities traders. Another 11% strongly disagree. So that's nearing half of the people that disagree or strongly disagree. A large portion are neutral, and then you have the portion that are agree or strongly agree. What this tells us is that most of us don't feel like we are experienced equities traders. So that's good. So why I want you guys to recognize that is as you see questions in the Slack or an email or as we talk to each other, like you're gonna get a lot of people with like new questions who are asking things that you might be in the group of people that consider yourself very experienced and think like, why wouldn't this person know that? Well, the reason is because like the vast majority of us are actually not all that experienced. So something to keep in mind. If you could, if anybody, I'm not sure anyone has their mic on mute at the moment, but if you could go ahead and mute yourself if you're not talking, that would be helpful.
It's on the bottom left corner for people that are not used to using Zoom.
Yeah, I would mute everybody, but I've lost the ability to do that somehow. When I share a screen, I always lose where I can go to do that. But in any case.
I think everybody's already muted, John, so it's okay.
All right, cool, guys. Thank you very much. Some other survey results. How much simulated trading experience do you have? Let's see. About a third of the people have 3 to 6 months, and about another 20% have 3 months or less. So half of us don't have that much simulated trading experience. So it kind of goes with the common theme of like, you know, we are more unexperienced than we are experienced. And I think you'll see the same thing in the live trading results as well. And then on the results of did you use DAS Pro Trader before bootcamp? Most people have, and most people have not used TraderView. So these are almost the exact results we see in every bootcamp, is that most people have DOS experience. Most people don't have TraderView experience. And that's because a lot of people are coming over from the BBT side. But please, if you are in the 20%, 27%, or if you are the portion of people who don't have DOS experience, I want to help you. I am very eager to help you learn how to use DOS. And I will tell you that the other people in this group are eager to help you use DOS as well. So please don't feel left behind or alone. And in fact, Slack is it's already proving to be a very useful tool. If you are tuned into the Slack channel, the Group A Slack channel during the day, people are answering questions all the time. And I appreciate everyone who comes on to help their fellow traders because that's what learning to day trade is all about. You never do this alone. You do it with the help of other people. So ask your questions, and if you are among the population of people who know the answers, please continue to help because I really appreciate it, and it's really awesome. And it really makes a better bootcamp experience where by the end of this thing, we are helping each other. And we don't want to go through this as individuals. We want to go through this as a group as much as we can. And we're off to a great start in that regard. A couple administrative items. I don't know if that term translates well into other languages, but that's what we call them in the U.S., or at least well, I was in the Army for a long time. We call these admin things. But anyway, please make sure your Slack name reads as PCT, then your PCT number, parentheses, your preferred name. In Slack, and then in TraderView, please try to do the same thing. Please enter your name as PCT, your PCT number, and then parentheses your name. This just makes it easier for me to identify who I'm talking to. Oftentimes, when someone writes to me in the middle of boot camp and says like, I'm having a hard time and I want to talk to you about some things, and the easiest way for me to look back at all the correspondence I've had with them is to look up their PCT number. So often if you write to me, and don't think this is weird, but if you write to me with a question, I might write back to you with, hey, Brock, PCT 04, whatever. I'll put your number in there because it makes it easier for me in Gmail to go back and search through all the correspondence I had with Brock. So if I do that, don't think I'm being a bizarre, but that's the purpose for that. So just those couple things. If you could, in Slack and in TraderView, make your name as such. Also, in the last bullet here, please participate in Slack if you can. And I already said this but there's a lot of good conversation already going on. There's a lot of people helping each other out with hotkeys and beyond that, but strategy, suggestions, and information. If you're able to participate and keep it open during the day, there's a lot of good information flowing through the Slack channel. And I know some people have real jobs and they're busy during the day and they can't be busy with 100,000 notifications, so they turn that stuff off. I get that as well, but consider it because there is some good information coming through the Slack channel. All right, getting started technically. So some of you, not 2/3, 3/4 of you have experience with DAS, and you may not need this assistance, but 1 out of 4 of you do. If you are new to DAS, please go to the DAS intro videos. I can't say enough about this because in previous boot camps, even with people who said they knew how to use DAS, we got like two-thirds of the way through boot camp, and people would say like, oh, I never knew this thing. I never knew that you could do this. And I thought to myself like, well, that's in the basic DOS videos that we offer. Like, it's just interesting that someone could go through 2/3, like 2 out of 3 months of boot camp and not know how to do something like that was kind of basic in DOS. So if you are new to DOS, for sure, check out these videos at this link. And even if you're not, you might want to poke around those just to make sure like there's not one video describing some DOS function that maybe you don't know about. It might be worth your time. And also for TraderView, I know we haven't begun of our TraderView accounts yet. They should be coming out this week from Norm. I'm not that they should. They will be coming out this week from Norm. But if you are unfamiliar with TraderView, and that would be 3/4 of you according to the survey, we have a video at pcapitaltrading.com/topic/TraderView meeting. You can find it in the website. But this video explains how to use TraderView, how to import your trades from DOS every day, and how to use it as a functional tool for yourself. So definitely check out this video if you're unfamiliar with TraderView. So there will be more people unfamiliar with this than there are unfamiliar with DOS. Any questions up to this point? Sorry, I've been talking a lot and not giving people a lot of opportunity to speak.
I just want to say something, John.
Yep.
Something really cool about the TraderView video is that you can start, if you're already trying a specific strategy or not, you can start saving your performance to import it later on TraderView. So you don't need to lose the data that you are already collecting. You can save it and later import everything until you don't have TraderView.
Yeah, very true. Thanks for Carl. Yeah. That's a good point.
And John, can I have a recommendation or kind of suggestion?
Go. Yep.
Maybe you can connect the traders who get more familiar with DAS. The 3/4 part of traders used to work with DAS for more than 6 months, 7 months, and help others. Help this 1/4 this quarter of traders who are really new to DAS, because I'm sure it can help. It took time. It took long for me, at least almost 4 months, to have a DAS set up. But I'm really okay with it. So I do believe we can help.
Yeah, thank you. Yeah, I totally agree. In terms of how we would better assist them, I will say at the moment, if you're new to DOS and you have any questions, even the silliest, most you're afraid to ask questions, please just send it to the Slack channel. We'll take care of you. The community will take care of you. If you are shy to send it to the Slack channel, send it to me or send it to Dima, and that's fine as well. You will 100% be taken care of. But yeah. Is that Hojat?
It's Jay Hojat.
Yeah. Okay. Yeah. So thank you it's a very good point. And I will say in these beginning weeks, just any question you have, put it in the Slack channel. We're gonna find it and we're gonna help you. We've already demonstrated that we have a great group here, and we have many people willing to help. And every day I see someone ask something, and I see people are piling on to provide answers. So yeah, don't be shy if you're new to. Look, when I was new to DOS, I had a lot of questions, and I was kind of by myself. I didn't have a community quite like this. There's certainly nothing on Zoom or a Slack channel. It was mostly the Bearable Traders chat room, and I was kind of shy to ask things in the chat room because it seemed like people were asking a lot of very smart trading questions, and the discussions were about the stocks to trade. And I thought, well, nobody's asking about this little DOS question, this simple thing that is bugging me, and I would be afraid to put it into the channel. Please don't be afraid to put it into our Slack. We're a group of people trying to find our way from bare bones beginning, at the bottom to others trying to figure out their strategy. But we're all very understanding. I guarantee you, traders are some of the most understanding people you will ever meet. You just got to ask them for help, and they'll help you. So yes, thank you very much for that comment. Yeah, just lay it out there, and everyone will help you out. All right. So what does the gotta admit somebody. What does boot camp look like? So, gotta go back one. So what, I can't see the top of my slide here. What does bootcamp success look like? There you go. So some of you are here legitimately seeking like a seat to trade with P Capital Trading. Some of you are brand new and don't have such high aspirations. But if you are in the camp of people who are thinking, I want to trade for P Capital Trading, to trade for Andrew, then this is what success looks like. And it's kind of simple, not simple in execution, but it's simple in description. We ask that you create a great trade book. And maybe great, I don't even know if great's the right adjective, but to create a credible trade book, to create something that demonstrates how you trade. And that's not the hard part. The second bullet's the harder part. It's to trade your trade book. So it's one thing to say, like, this is this aspiration I have. This is how I want to trade. This is the thing I think I'm supposed to be doing every day. The second bullet is, like, are you actually doing that? Like, that's the demonstration we want to see, is that you've said this is how you trade. This is a setup I'm looking for. And especially important, this is the risk reward profile I'm looking for, and I adhere to that. But I am adhering to that. Like, I'm looking for this setup, and this is what I'm risking every day, and I'm obeying my stops, and like you can clearly see that I have this thing I want to do, and this is the thing I'm trying to do. So that's the first two bullets, and then the third one is to produce an upward equity curve. And upward is and we can describe that in many ways, but to produce what is clearly to the eyeball a consistent upward equity curve, demonstrating that trading your trade book, creating a good trade book, and then trading it is producing positive results. And I will say, this is very important, that the upward equity curve can occur later in boot camp. And for the most part, for anyone I've ever recommended to Andrew to interview, that upward equity curve has never occurred at the beginning of boot camp. It's occurred some point later. I don't know if I have a slide on this further on. I don't think I do. But almost everybody that starts boot camp starts on a downward slope. I don't know what it is exactly. I think people want to come out of the gate like, whatever race you're in. Do you ever want to come out of the gate like not running as fast as you can? You know what I mean? Like, so people come out of the gate. People look at this as a competition, and I look at all these faces now. I'm looking at everybody: Tracy, Angel Rose, D Miles, there, Walt, Ricardo. Like, all of you, I see all these faces, and I see people who want to compete against one another. And that's not what you need to do. 100%. You do not need to compete against each other. That I guarantee you. Please erase from your mind any notion that you need to compete against each other. You're competing against yourself. That's all it is. Forget about everybody else in boot camp. That nobody else matters. I'm telling you. Because somebody might start boot camp and to say, I'm going to risk $10 per trade. I'm going to do it for the rest of boot camp. And they might do that, and they might slowly eke their way up. And at the end of boot camp, they make like $500 or something. That'd be very impressive. If that's how I knew you were risking, money per trade, that'd be a very impressive result. And other people might risk $100 per trade, and they might achieve something greater, assuming they had the same kind of progress. But my point is, there's no reason to compare yourself to anyone else. To compare yourself to yourself. Like, what does your equity curve look like? So, I kind of lost my train of thought. I forgot how I got here. But anyway. How did I get here? Dima?
The first month, everyone loses.
Thank you. Yeah. Jesus. Yeah, thank you. Dima's the best. Yeah. So what does typically happen is when boot camp opens, almost everybody loses money. I see it every time. Almost everybody loses money, and they come out of the gate competing and trying to prove something. And then a lot of people turn it around. They find their bottom where they're sick of losing, and sick of saying like I shouldn't have tried to do this, and they find their way. You don't have to do that. We'll see what happens when this boot camp opens on January. Is it 28th, 27th, whatever it is. We'll see how everyone does. But I implore you not to think of this as a competition, and not to think of it as you have to prove anything to anyone out of the gate. I mean, if you really are looking for to trade for PCT with Andrew, you have to show. He says this all the time, but not a lot of people listen. You have to show that you are a good risk manager, that you will protect capital. You know what I mean? That's what he's looking for. He's looking for the sheep guard dog. What are those sheep that not the sheep, the dog that protects the sheep. You know what I mean?
Border Collie.
Yeah, the Border Collie or whatever the hell the dog is. They relentlessly protect the damn sheep. You know what I mean? That's all they do all day is protect the flock. You know what I mean? Keep the flock where the flock is. That dog doesn't particularly care about the breeding of the flock. He just cares about keeping what's alive. So it's about protecting your capital. I feel like I'm probably beating a dead horse at this point. But anyway, demonstrate a good trade book. And in doing this, there's a trade book process. There's a trade book meeting every Tuesday at 5. And in that meeting, Mike will talk about a trade book, kind of homework assignment or something to work on for the next week. And Simon is our trade book guru. And the way the process works is they'll kind of talk about what is the chunk of the trade book you can work on this week. You can work on that piece of the trade book. You send it to Simon, and then he provides feedback to you. I think, did he talk about this today, Dima? Because I missed the whole meeting.
I talked to him at Amen, and he's doing that next week. That's when the trade book meetings will start.
All right, he'll talk about it next week, yeah.
So he'll be there Wednesday morning next week.
Gotcha. I apologize I missed the PCT meeting today, but I'm in the Bearable Trader chat room at the same time as the moderator. But the way the process works is every week you have a chunk of the trade book to work on. You can send it to Simon. Simon sends feedback to you, and you can kind of refine that piece of the trade book. So create a great trade book. Trade your trade book. I can't say enough about this. At the end of boot camp, if you said I trade 5-minute ORBs, that at the end of boot camp we looked at the data and we're like, wow, this guy traded 5-minute ORBs. No shit, he traded 5-minute ORBs the whole boot camp, and you were kind of a break even or just above break even trader. That says a hell of a lot more than saying I'm a 5-minute or I'm a 5-minute ORB trader, and then we look into your trader view data and we're like, but yeah, you traded these, but then there's all this shit during the day that, this other stuff you got into and we don't really understand what that is. That's the kind of stuff that we don't want to see. Anyway, let's move on.
Can I ask a question here?
Yes.
On the trade book, I see I've got resistance to doing this because it, in my mind, it just doesn't feel like the sexy part of all of this. But what do you think, just a first step to get going on this? Where would you start?
Jeremiah, is that you?
Yep.
I'd follow the trade book meetings and the process with Simon. So if you're not too keen, look, I get it. So
I know it's important, and I wanted. It's just fuck. I'm having resistance, sitting down and starting it, just seeing what would be just an easy first step to get in it.
No, I hear you. That's a thing about trading is people will suggest things for you oh, you should make a trade book, or if you listen to Kreda, she sometimes talks on the Bearable Trader side. I think she might do a thing for PCT. I'm not sure, but she's our psychologist. She talks about affirmations and we all kind of resist on certain aspects of suggestions. When Kreda suggests writing down affirmations and recording them and listening to them in the morning, my brain resists that kind of. I'm I don't know if that's me. I don't know if I'm the kind of guy that says I'm a good trader and I don't disobey my stops, and I record that and listen to it before I trade. We all have kind of our pushback on certain things. So I get that you can look at the trade book idea and think, it doesn't mesh well with you. But Jeremiah, I would suggest that you give it a shot. I think that just writing down what it is that you think you're doing every day and comparing that to what you are doing every day is a good mental process. And it's not always easy, but I think the last thing you want to be is the person who shows up to trade every day and you never record anything. There's no contract between your actions and what you say you do in your head. I think that's the worst place to be as a trader, because you can keep showing up to the market every day and trying things, but you can never compare what you're doing to what you think you wanted to do. And that's what the trade book kind of closes the gap a little bit between like, I promised myself this is what I am trying to do and this is what I'm trying to do. So I think that's the benefit to it. And to get started, or to, to try to even involve yourself in the process, Jeremiah, I would download the trade book template from the PCT site, and I would try to get involved in the weekly process with Mike and Simon.
Okay, cool. And just one more question does anybody ever use Evernote on a Mac besides OneNote? Do you know any other? I keep hearing people talk about using both Excel and OneNote. Do you have any other suggestions for Mac users like Evernote? Is that possible?
I'm going to apologize. I'm like a total not Mac user since 1986 when they gave me a Mac in art class. But and I'm not too smart on OneNote either. I'm a bit of a boomer when it comes to Mac or Excel, or not Excel.
What do you use?
Office parts. I use Excel. Can you see my screen right here? The one I'm showing.
Yeah, that's where you're keeping your trade book, basically.
Yeah, I keep it in Excel for the most part.
Okay.
I don't know. Maybe I'm missing something by not trying OneNote. I've never dug into it, but I gather my information in Excel. And actually, your question is very timely, because that's what I was going to talk about on this slide. But
great.
This is a thing a lot of people don't want to hear. And it's something that Dima and I both believe rather strongly, is that you have to gather data and or information, whatever you want to call it. Data is such it's a bit of a, I don't know. It's a bit of a poisonous word these days, because like so many people use the word data for all kinds of things, but it's what I use. It's information, whatever the hell you want to call it. But when you take a trade, I firmly believe, and I think Dima would say the same thing, you have to gather information about what happened and why the trade worked or why the trade didn't, and why you took the trade and why you didn't, or not why you didn't, because then you wouldn't have information. Why you took the trade, why it worked, why it didn't. And this is kind of the purpose of this slide here, is that you have about 60 days to trade. I don't know the exact number. I didn't look it up, but it should be about that. And everyone that's succeeded in boot camp, the people that have really produced a positively sloping, strong equity curve, have been the people who focus on a particular strategy and who gather data on it and make adjustments based on what the data tells them. So I have a slide coming up about this, about how focused you should be as you go through boot camp. But I believe that at some point in boot camp, from the results I've seen, you should get singularly focused on one strategy. You should use this time to really work out one strategy, to really take that one thing and gather specific information on it. And my point with this slide is you have about 60 days to trade. So the question is, how many good setups do you get on a strategy each day? Personally, I trade high day breaks, and I take an average of 5 trades a day on high day breaks lately. And so the question is, how many good setups do I get on a strategy each day? The answer is probably less than 5, honestly, because I probably have one that I get into, that I shouldn't have. But it's probably between 3 and 5, somewhere in there. So that would be my data set. If I was trading high day breaks, if I came into boot camp saying like I'm a high day break trader and I want to use boot camp to like better my process and improve myself, then in 60 days, I would have somewhere between, I'd probably have closer to 60 times 3 good setups a day that I want to measure and want to analyze. So 60 times 3 is 180, right? Maybe 60 times 4, which would be 240. So somewhere between 180 and 240 setups I would have. I would consider this would be my data set. That's the thing. Like, we want to use Bootcamp to collect a data set to improve ourselves. And you got to be realistic about what you can capture. So if you come in with an idea, like say I came with, like I'm going to trade high day breaks and I'm going to take this really seriously and take good setups, I would get between 180 probably and 240 good setups. That would be my data set. And this is what I would collect. This is why I have the screenshot here. This is from a webinar I gave actually on Monday for PCT. But this is what would go in my journal. This is the stuff I would capture about my trade. Like, because I take high day breaks, I would record what the high day was and what the actual level I traded was and what the nearby levels were and things like that. That would be the information I'd want to gather. I'm losing my voice here. I've been talking too much. Hopefully I get through this presentation. I might have to go grab a bottle of water. But you got to think about that. Like, if you go into boot camp thinking you're going to trade like 5 different strategies, you're going to have a much harder time. Even 3 different strategies, you're going to have a much harder time like focusing on the gathering of information to truly make the fine-tuned tweaks that you want to do to come out at the other end trading better than when you came in. Which gets to this idea here. So this is what I call the bootcamp paradox. And I admit this is a thing, and this is something that some of you are going to have to deal with, because I want anyone who's a new trader who doesn't really have a strategy in mind, I want you to pay particular attention to this slide. Bootcamp has a start date, and Bootcamp has an end date. And there's a journey you're going to go down between the start and the end date. That's this road here. This icon represents your trade book. It looks like a little bit of a textbook, a little loose leaf book here, right? That's a trade book. That's your peak capital trading trade book that you want to create. The question is, at what point along this journey do you want to kind of commit to one thing to create the trade book? Because if you come into boot camp having no idea what you want to trade, like you don't know. Like, I've heard about this 1 minute ORB. I've heard John talk about high day breaks. I've read a book that talks about cup and handles. I read another book that talks about head and shoulders. You might be like, I really don't know where to start. That's okay. That's completely understood if that's where you're coming in. But what you don't want to do kind of is go through the whole journey and end up at the finish line being like, I still don't know if I like cup and handles or head and shoulders or 1 minute ORBs. Like, you don't want to spend your 90 days doing that. I believe at some point along the road, you want to commit to an idea. So this is the paradox of bootcamp. If you come in with no idea what you want to trade, at some point along the way, I believe you should commit to something. You should pick a strategy that kind of calls to you. It could be, and why it calls to you could be different for many reasons. It could be about the time of day. You could say, look, I only have the first hour of the day to trade, so I kind of need something like a more breakout momentum strategy. Or it could be like, I have all day to kind of look at stuff, but like I'm a more patient person and I like to kind of feel things out and let things flow. And you might be more like a reversal trader. But in any case, at some point along the line, you are more advantaged to focus on something and to say, like, this is the thing I'm going to work on, and I'm going to start collecting my data. This data that we talked about here. You know, your spreadsheet or whatever way you collect that information, because you want to get as many iterations of the trade as you can. Because remember I talked about if you had 60 days to trade and you started out with an idea and you had 3 good trades a day, you get 180 trades in boot camp. Well, if at some point along the line you say, look, at the 45-day mark, I'm going to focus on this, and I think I can get 3 good setups a day, then you're not getting 180, you're getting 45 times 3, which whatever the hell that is. 135, maybe. If I'm correct on that, I'm impressed. So that's the paradox you got to kind of deal with. Like, there's a paradox of exploration versus focus, and that's what you got to think about. And I don't have an answer for everyone, and I apologize for that, because you could come to me and say, when should I focus? And I can't really tell you. If you're a brand new trader, I can't say, hey, Jody, like, I think at the 30-day mark is when you should focus on one thing. It's not the same thing for everybody. You kind of got to feel it out. But I'm willing to talk to everybody throughout the process, you know, about your thoughts on where you think the point is where you might want to focus. But I think it's kind of a waste of boot camp to get to the end and never having focused on anything. And I say that because if you take my strategy, and I'm not suggesting it for anyone, but if at some point, say halfway through the boot camp, you're like, I'm just going to focus on high day breaks, you're going to learn a lot about what volume means to an entry. You're going to learn a lot about what levels mean, support and resistance level mean to an entry. You're going to learn a lot about what pattern means to an entry. Those things that you learn are very applicable to other strategies. The things that you learn from trading high day breaks would be very applicable to an ABCD break, or not ABCD break, but ABC pattern, for example. There are things that will carry over. Like, you shouldn't look at it as a sunk cost. There are things you can carry over. But I just don't think, like, and I've seen people do this, they kind of go through all the boot camp and like, I'll spend like 15 days on this strategy and 15 days on this one and 15 days on this one, 15, whatever. And they get to the end of boot camp, they've dabbled a little bit in everything. I don't think they're getting as much as people who said at some point along the way, all right, fuck it, let's focus, let's drill down on this thing. I think that's the better path. That's just my personal opinion. And I wouldn't choose that focus any later than 1 month left in boot camp. I think that's even a bit late. I think about the halfway point, I think you need to like pick something and go with it, and trust that what you learn is going to be valuable to you along the way.
Yeah, John. I've got like 4 that I'm curious. You know, some that I've done in the past, some that are new here that I wanna test, and I was thinking test those for a week or 2. And see how they all feel, and then narrow it down to 1 or 2.
Yeah, I think you can do that, Jeremiah. I just think if you're only trying for a week or 2, what you're looking for is what suits you personality-wise.
Yes, 100%.
Yep, not what seems to work profit-wise. Like you will learn nothing about profit in 2 weeks. Trust me. Like it might be profitable and it might not. But what
for me, it's a flow. It's like a flow. For me, I know there's certain trades like I just feel it's flow, like I'm flowing with the market, and it's fun. And some are just like nerve wracking, and I'm just like looking between these ones. Which do I feel in flow?
Yep.
Even if I take a loss, like okay, that's cool.
Yep. So in the short term, exactly. I would see what feels like it suits you, but that I wouldn't take it any further than that.
Hey, and this was asked on the first call earlier. Is there a way to get rid of the loss cap for the first week or so? Because by 11 o'clock, I realized I'm not good at orbs and trading early because I was already at my 750 max loss for the day. And it was selling me out of positions at that point.
If in the initial period, if you max out for a day, then let me or Brian know. Brian Walquist. He's kind of our tech guy. He'll reset you for this initial period.
Perfect.
Yeah. I apologize if in the beginning of boot camp when it first started I sounded like we wouldn't do that. We will do that. But when we get into the true period of boot camp where we're trying to assess ourselves, we're gonna not do that. So, but yeah, I understand people are trying things out in the initial period. I will say, be very careful. Some people are maxing themselves out by like using like max buying power and just buying a shit ton of shares, and they're like, I wanted to try out my stop to break even hotkey. Well, like you don't need to buy $100,000 worth of Apple to test out whether stop to break even works. You can buy one share to so just be cognizant of that, because everyone that stops out, like it takes Brian a little bit of time, and it could take an hour or two to get you reset.
John, I have a question with regards to your data collection.
Yes.
You showed a couple of information that you normally collect for your break of high of day.
Yeah.
And my question is, part of it comes naturally from DAS when you export it, and then you work your way out on Excel and add more stuff, or how do you proceed normally with your data collection?
Everything that goes into my Excel sheet, I enter manually. Like nothing actually. There's probably a slick way to like take the DOS log and like import it somehow into Excel. I don't do that though. Everything that goes in my Excel, I enter manually. And I will tell you, there's an important point to that, because journaling is a pain in the ass. Like, I don't know anyone that like sits down at the end of the day like, I can't wait to journal some trades. Like it's kind of like it's the thing at the end of the day that you're like, I should do this because it's the right thing to do, but I'd rather be playing volleyball or whatever. So journaling kind of helps me not overtrade, because I have to go into Excel and enter like, where I entered and where I exited and all these nuances of the trade. So it really does help me, because if I overtraded, like overtrading for me is probably these days, it's probably 8 or 9 trades, but like if I get that high or like to 10 or 12, like it's a giant pain in my ass to like go into Excel at the end of the day and go back to all my trades. And a lot of it can't be imported from DAS anyway. If I want to figure out what the high a day was, like here, this first trade here was Square. I bought at 131.11, but the high day was 131.15. DOS, there's no report in DOS that gives me that. I have to go back to a chart and find out that the high day was 131.15. So I actually think it's a benefit to proper journaling that if you make a journal that's very consistent with the way you want to trade, that captures elements of your strategy, it should be kind of a pain in the ass. And and when you are properly journaling in Excel or whatever it is and capturing the pieces of your trade that were pertinent to like success or failure, that you have to go back and get that stuff manually, and that will kind of be a forcing function to make you not overtrade. Hopefully I answered that question, Ricardo. That might have been a bit off topic, but
No, it helps, because what you described, it's what I'm feeling already a little bit. I'm journaling or trying to understand my own journaling a little bit. Mike advises to take screenshots as soon as you enter the trade. So I'm basically only concerned right now if my entry is right, and then I automatically screenshot it and cut it and save it on OneNote. But what I was also trying to understand is, obviously you have standards or variables that make sense to your specific strategy.
yeah.
Okay, that you develop over time, which is completely understandable, and it makes sense because you traded 2,500 of those, so you understand which variables matter and which don't. But for someone that hasn't defined yet a strategy or knows what matters or not matters, which variables would you recommend? Like the normal ones, I would say it's obviously if you're long or short. What I'm currently collecting more, it's the ticker, obviously, the RVOL, my entry price and initial stop loss, Holding period I wasn't considering, but it makes sense, and you can probably do it with a couple of formulas on Excel if you enter and exit automatically. Anything else besides the ones that you use to your strategy that you would see a beginner trader gather, or it would make sense for us to gather?
I'll tell you what I'll do, Ricardo, is after this meeting, I will send you guys the template for what I use as a journal, and you guys can at least use it as a base. Because I know it, and a lot of people aren't like real slick with Excel. And if you have any questions with Excel, you can contact me. Maybe we can have like a separate Zoom meeting to go over some basics of it, because it's a very powerful tool for all things in life. But it's good for training. I'd be happy to help anyone out with that. And I'll send that template out after the meeting. But so, Ricardo, what I kind of think about journaling and capturing information is there's certainly a trade-off, right? Like, none of us are trying to day trade because we want to spend 23 hours a day capturing data and analyzing it, and then, you know, sleeping an hour and waking up and then going back to the market. That's not fun. I'd rather work a boring job instead of doing that. So there's a trade-off, right? And so you can do all kinds of things. You can take a screenshot of every trade you took, and you can record it with video, and you can look at the, you know, you can record the level 2 and the time and sales. But there's definitely a trade-off between, you know, what you're putting into it and what you're getting out of it. And that's the hard thing about journaling. And I don't want to be the guy to say, oh, get everything. You're like, you know, like, because it's not realistic. It's just not. You got to kind of have to find, like, what are the things you should be gathering. So if you look at, so for example, if you look at the screen here, like, I've been recently gathering information on the levels that are near where I take my trade. So if you look at this square trade, the high day was 131.15. I bought at 131.11, so I'm essentially playing it on 131.15. Actually, no. I bought it at 131.11. The high day was 131.15. My data says I actually played it on the level of 131. So I played it on the ask there, not at 131.15. It got to a high of 131.83. I actually took a loss in this trade, which is a pisser. Not a very good trade for me, by the way. Not proud of this. But, and it was near the level I traded was near the pre-market high of 131 exactly. These are things that are interesting to me. But if you watched my webinar last night about the high day break, I talk a lot about, like, what did the volume look like and what was the SPY doing. Those things are very hard to quantify. It's very hard to quantify what volume looked like in a way that's realistic and truthful. So I've been very hesitant to try to add, like, a column to my spreadsheet about, like, what was the volume? Can I put a score on it, or can I somehow quantify what it looked like? I've never done that because I don't feel confident that I can do that truthfully. And the last thing I want to do is, like, to untruthfully try to quantify a variable in my trading, because what you tend to do when you do that is you tend to give it a higher score than you should, because you want to believe that you made a good decision as opposed to a bad decision. So I could try to add a column that says, all right, let's add a 1 to 10 score for volume, and we'll analyze that. But if I can't, I'm sorry to get into, like, a real technical discussion here, but I'm probably going down a bit of a rabbit hole. But if I can't really quantify volume truthfully and very accurately, what I'm going to do is tend to score it higher than I should, because I don't want to tell myself that I made a bad decision. And that's going to lead to a variable that's it's overinflated to the good side, so to speak. So that's the dilemma, Ricardo. You know what I mean? Like, you can record lots of things, but I'm an engineer by nature, and I tend to want to measure things that can be measured properly. That's how my brain works. And that's why I think you got to be careful when you're, well, and not to say, I can be careful here, but like if you're not an engineer by nature, you got to be careful about quantifying things, because if you're not a hard ass about trying to get a number as accurate as it can be, you can make it tell lies to you, sort of. So, shit. I think I'm rambling on here, Ricardo. I think I'm going down to a bit of a rabbit hole.
No, I understood the main message.
Okay, thank you. That's the nicest thing you can say to me. All right.
John, just a time check.
Yeah, thank you, Dima. Yeah, sorry. All right, plowing ahead. All right. So a lot of you are probably looking for a strategy at this point. So let's talk about this as well. Some people are coming in with like no idea what to trade. So we have purposely front-loaded strategies in the classes for PCT. You'll notice as PCT started, Peter did a mountain pass class. I did a high day break class. Mike did his high day break modified class. We are purposely front-loading those just so you can kind of get an idea of what we kind of trade. So if you have nothing else, you have no idea what to do, you can kind of think about those things. If you are a Bear Bull Traders member, and most of you are, the majority of you are, obviously you can go to the website there and check out the types of strategies that some of the moderators there trade. If you're not an elite member and you can't see all the webinars, trust me, if you go to YouTube, to the Bear Bull Traders YouTube page, a lot of what is posted on YouTube is really just kind of the same content as the webinars. It's just not as well packaged. You know what I mean? So you might have to watch 8 Thor videos to get kind of the idea of what you might get in one Thor webinar, but there's stuff there as well. Books. I'm a big fan of trading books. I think that people who write trading books put great effort into them. You know what I mean? So I don't want to shit on YouTube or anything, but like it's easier to make online content these days than it is to write a book. Writing a book's not an easy thing. So I think people who do write books about trading tend to put good thought into them. So I'm a big fan of that. So that might be a good thing to check out. I've got a couple favorites here. But one in particular, I really like this book. It's a Beginner's Guide to Day Trading Online by Tony Turner. I don't know if you've ever seen this book. And so I'm not selling Andrew's book. You can check his out as well. But I really think this is a very comprehensive book that covers a lot of aspects of trading, and I think it's really good. So something to consider. But then beyond books, yes, YouTube can be a good source of content as well. Just be careful what you're watching. And I don't have a good barometer to tell you, like, you know, a bullshitter from someone who's trying to really help you. But you guys can probably use your own internet barometer to kind of feel that stuff out. But, you know, I think the Bear Bull Trader stuff is very good. I think the stuff from SMB Capital, if you ever look at them, I think that's very legitimate. And there's some other channels as well. So kind of feel out who's good. And other traders, you know, talk amongst each other. You probably know other people that trade at this point, you know, whether it's through Twitter or whatever, you know, hit them up as well. But if you're really struggling and you just like, I have no idea where to begin, hit up me or Dima and ask us, and we'd be happy to kind of point you in the right direction. All right. I took way too long. Yes, someone's talking.
And John, just because you recommend this that book, can I recommend another new book that, you know, Mike recommended, actually all of us?
Yeah.
This is the volume price analysis for Anna Cooling. And, you know, for those who want to know more about, you know, the volumes, that's amazing. That's really amazing. After 9 months, it helps me a lot.
Yep. No, Hoja, I totally agree. And gosh, not to make this into a 4-hour Zoom meeting, but yes, volume is everything in trading. Let's just all agree on that. Nothing happens without volume. Volume. There's got to be there when you trade. So yes, this is a great book by Anna Cooling. volume price analysis. 100% agree. Thank you. All right, Dima, off to you.
Thanks, John. I did the slide this morning. Is there anyone who did not attend the morning meeting?
You are putting us in check, Dima. Nobody will say that they didn't.
I did not make it to the morning meeting.
All right, I'll just quickly go through it. So my name is Dima. Most of you know me if you're Bearable Traders. I'm in the chat, and Mike. But basically, my background is I worked in the construction industry. I started as a carpenter and ended as a operations manager. Before that, I was doing accounting, then decided to become a carpenter, then decided to become a trader. So that is before trading. And for my history, again, most of you know, I read Andrew's book and I thought it was really easy to understand. And then for a year, I couldn't trade because I was working same hours as the market. And then after a year, actually it was, if you notice, this is April 2020. So in March 2020 in Canada, COVID started hitting things and businesses. So then that's when I decided to trade full time. It was a perfect time to do that. And then 6 months later, I started with PCT, the first boot camp. So I have the experience on both sides and more than happy to share everything that you guys might have questions on. And then February of last year, I started helping with the Bearable Traders. And a couple of months after that, Andrew asked me to help with the Peak Capital Trading mentorship. I trade 5-minute ORB, ABCDs, and I have been doing some reversals. Not as many to count, but I have a very restrictive criteria, so I don't get to do them much. And then, yeah, I like music. I play music and listen to and travel before COVID and hanging out with my friends and my family, which is this morning I mentioned is very, very important to have a support system when you're trading because, you know, it could be very hard psychologically and mentally. Next slide. Can you go through all of them if you don't mind? I actually just wanted to mention a couple of things to John's point about journaling. I just wrote notes. For me, my experience, journaling with details deter you from overtrading. So that's a really good reason to, because you do not want to journal 20 trades. And that sort of, as I increase change the way I journal, it definitely automatically made me not want to overtrade because I don't want to, track everything. And the more important thing about journaling is I agree with John, especially when you have a red day, journaling is a chore and definitely nobody wants to do it. Journaling is useful for me when there's a problem. So I'm journaling every day. It feels like a waste of time because I never go back and look, not never, but when I have a questions, all the information is right there. An example of February of last year, I was trading my 5-minute ORB like I have been doing for the last year and a half. And no matter what I did, it just did not work. I was doing the same thing. I mean, the market changes, my psychology changes, but it was a whole month and almost all of the 5-minute ORBs weren't working. And I went back in one weekend to every single trade screenshot for that month. And it was so interesting as I went through all my criteria and checked what I did and what I didn't do. None of that helped, but what helped me is I recognized the pattern that about 97% of the trade that worked had an ABCD pattern in the 1 minute. And for those of you who've seen my YouTube videos and my trade book, I always trade 5-minute ORB with an ABCD in the 1 minute because that dramatically changed my success rate in that strategy. I would not have known that just by journaling and tracking every day if I did not go back and look at the screenshot. So the numbers, the data set is important, but as well as your patterns and the screenshots of your trades. For the other point I wanted to make is about the data set itself. So Again, if you're a Bear Bull trader, you probably know my first year, I was losing 8 months in a row, but I just kind of stayed busy with tracking and doing all the sample sets. And it's sort of as you were having red days or red months, my sample sets were encouraging me. You know, for example, it's like I had more green days than red days, or as I was losing every month, I was losing less every month. So it's very important to have something to focus on that gives you a different picture that you can feel good about as you're having red days or red weeks or red months. The other point about the tracking is that for me, there is no question I can answer without a data set or a sample set, because there's just too many variables. There's the market's variables and there is me as a variable. I feel differently, you know, depends on what's going on in my life. So you have to have a sample set that's long enough that can include a market cycle or, you know, different changes in your psychology if you're feeling good or not as good. And the third thing that I wanted to mention is about the data set, that it objectify trading. This is really what made a difference for me. If you can change in the beginning, if you can try hard to change your mindset and think of trading as data set. You need this information to make decisions. Instead of focusing emotionally on a bad trade, then you actually can track that and say, these are the criteria that were met and these are the criteria that didn't meet. And go from there. And it's less judgmental of yourself and less, you know, it sort of breaks the cycle between you having a bad trade or a bad day into the next day, because we know that sometimes that happens. So if you think of it as a data set, then that's all it is, as opposed to an emotional thing. As far as how I found my favorite strategies, it is really nice if you know how to, coming into the bootcamp with the preset strategy. But we all had to start somewhere. Similar to Jeremiah, that's what I started. I started actually with 4 or 5 strategy, basically whatever Andrew was saying in his book. I made, a simple trade book for those strategies and just traded them. And for about 4 months, I started to recognize. In the beginning, I'm like, how do you see, an ABCD pattern or a 5-minute ORB? But about 4 months of trading, my first 4 months, I started to recognize, the ABCD or 9 moving average cross reversals and 5-minute ORBs. And then I did at that time, I didn't really know much about tracking, simple tracking, green or red, how many dollars I made. And then within 6 months, that's when I joined the boot camp. And when Mike said, I want you to focus on only 1 or 2 strategies, the whole decision was made by what made more money and what was I good at. And what's interesting, I have a note here that the 9 moving average, I was making more money, but I had more red trades. And the reversals were the opposite. I made less money, but I had more green trades because it goes up by partial and then it stops me out. That's the nature of reversals. So then, that made the decision easier. Success rate and dollar amount, I was making more in ABCD and, or losing less, I should say, at that time, and the 5-minute ORB. So yeah, and that's it. And just kept doing. Actually, I've been doing the same thing since then, trading those 2 strategies, and continuous tracking and improvement. I track absolutely every time I have a question, I create. Oh, sorry, guys. Every time I have a question, I track. I create a sample set for it, because you just can't answer with yes or no. And nobody else, just because John might have an answer, then that doesn't work, because with trading, there is psychology. So we're gonna, I think maybe next week or the week after, I'll be talking about how I partial and how I decided where to partial or where to exit and all that stuff. It's all with sample sets that is basically customized to your tracking and to your psychology. So that's it for me. Jeremiah, I just wanted to go back and answer your question. if you're not sure how to start your trade book, I would, like John said, this is how I started. I literally only had my strategies, what the strategy is, what the criteria, what the confirmation is, and then the trading rules and the trading plans, and then my, psychology things and affirmations and things that inspire me, and good things to keep me, the positive things that were happening. But it's a lot of information, and I think to think of all of it is overwhelming. So I would just start with something. You need the strategies because you need to track the criteria of what works and what doesn't. And what works you keep, and what doesn't work you change. That's it for me.
Thanks, Damon.
Thanks, John.
So if you haven't gathered it at this point, you're screwed if you don't like gathering data, because Dima and I both do. So we're going to talk about it a lot. We both think it's valuable, and I hope you guys get on board with the idea. But yeah, you know what? We're all our own people, so we're going to go through this journey the way we go through it, and we'll work together to achieve the best we can. Dima had a slide about TraderView. TraderView accounts will be going out this week, and we just want to make sure we'll work through this together. But we want to make sure that Dima and I both get added as mentors in your TraderView account, so we can see your accounts. But don't worry about that for now. We'll work through that technical item together. But by the end of the week, you should all have your TraderView accounts. And again, if
It was an issue for me, just wanted to mention, because the traders were sending it to Dima at Peak Capital Trading or Bearable Traders, and I was getting an error. So that's why I really wanted to make sure. That is a personal email, but that's what my traders use.
I didn't even notice that. Yeah, okay. All right. Yeah.
That's really what it is. It's just to make sure that you use this email as opposed to Bearable Traders or Peak Capital.
Okay. Yeah, we'll send out a reminder when the accounts go out.
Yeah, sounds great.
Yeah, thanks, Dima. So just one note. We're going way long here. I'm sorry, but I just want to point this out. For hotkeys, we had a lot of discussions about hotkeys when boot camp starts. Like, what hotkey should I use and how do I make them and stuff. In my mind, there's two hotkeys that are really important to you as a trader. One is the equalize risk per trade hotkey, which is all this stuff above this dotted line here. There's a long version of it and there's a short version. There's one for going, I would think someone's going to go higher, and I think someone's going to go lower, long and short. And then there's a move stop to break even hotkey. I really think that these two hotkeys are these are the two that you got to have on your keyboard or on your montage, as hot buttons or whatever. A lot of people worry about other there's other fancy things you can do. But if you really want to succeed in trading, please go check these out. There's videos on each of these on the P Capital trading website for the equalized risk per trade and the move to stop to break even. But equalized risk per trade, essentially what it does is when you see price moving somewhere you want to get into it at, like, I want to get into Apple at 170. Well, when you hit the hotkey and you hit enter, you double click on the chart and you say, I want to get into Apple at 170, but I want my stop to be 170.49. What DOS does is it auto calculates, like, if you want to get in at Apple at 170 and you want your stop to be at 170, or it's not 170, 169.49, excuse me, below 170. It says if you want to do that at this, you want to get in at this level and you want to have your stop here, based on you risking whatever amount of money you say you're going to risk per trade, whether it be $100 or $50, it's going to auto calculate how many shares you can get for that trade. In so many trading platforms, there's nothing like this. This is why we use DOS, because it offers advantages like this. DOS is weird in many other aspects, I will tell you. It looks like it's from 1994 and it's very quirky in other ways. But the hotkey aspects to it, like this is where you make your money back, is in this kind of hotkey. So please think about using the equalized risk per trade hotkey. And the other one that's really a moneymaker is move stop to break even. Because so many people lose on trades where, like, they get into a trade and it starts to move in their direction and they're like, we got some good profit. It's unrealized profit. and then it starts to come back to their break even, and then they are like, oh, I think it'll test where I got in, and then it goes down and they lose money. So I think a lot of people lose money in that respect. So like the move stop to break even, I think is a good way to stop you from making bad decisions. I just wanted to point this out early because I felt like in the last boot camp, we had gotten way to the end of boot camp, and there were people who said, I've never heard of these hotkeys. And I was like, whoa, like that blew my mind. I was like, I didn't think there would be anybody on our team who never heard of the equalized risk per trade hotkey or the move stop to break even hotkey. And I really, truly believe these are the two most important hotkeys in trading. So I want you guys to understand that these exist. And if you have any questions about these, please hit me up on Slack or email, and I will walk you through exactly how these work. But I'm trying to end this meeting because we're going way too long. All right, so to end this, I've not talked about this with you guys in person, but the trade 80 idea. Look, let me just end it this way. I've been through 4 boot camps now. That includes hundreds of traders who've come through boot camp. I've watched traders succeed and I've watched traders fail. And I would tell you what makes them succeed or fail is not the strategy. And I know that's weird to hear if you're new to trading because you're like, oh, there's so many places on the internet that will tell you, like, I'm going to deliver to you this idea. Here's the watch list. Here are the trades we're looking for today. Here's the thing you got to do. This is how you succeed. That's not what makes you successful or unsuccessful in trading. What makes you succeed or fail is you. And I'm telling you guys that from my heart. Whether you succeed or fail in this venture will be incumbent upon your psychology. It really is. It's about whether you can have the discipline to stay in this game and obey the rules or not. That's what's going to make the difference. Do not worry about a market maker. They are not your problem. I know it's fun to think like there's some boogeyman called the market maker out there that's going to like take your money. That's not your problem. There's another boogeyman called the algorithm. That's not your problem either. The algorithm and the market maker are not your problem. You are your problem. When you get off this Zoom call, I swear to God, go to your bathroom and look in the mirror and say hello to the biggest problem you'll ever have in trading. It's you. That is 100% true. I know that for a fact. So what I mean by this is trade 80. Trade your strategy. Focus on something and trade it. Whether or not it's the right thing or the wrong thing, trade that thing until you realize it's the wrong thing and then switch to something else. But in the meantime, trade your strategy. Do not be suckered in to other ideas. If you say that you're a 5-minute ORB trader or if you're a high day break trader or you're an ABCD trader, whatever it is, don't take reversal trades. If that's not what you're setting out to do. If that's not where you're putting your effort, then don't take those trades. All you're doing is getting suckered into a trade that someone else in a chat room said, this looks good. It looks like Tesla's going to bounce off S4. Whatever. Fine. Maybe it does and maybe it will. But if you don't have a trade book and rules for which you're getting into that trade for Tesla to bounce off S4, then that's worthless to you. So don't do that. Trade your strategy. Also, it's a waste of time because we're talking about collecting data, right? We want to collect data on what we are trading and what is working is what is not working. If you're trying to collect data on ABCD trades, it's not really useful for you to take a reversal trade on which you don't even have a data collection like set up ready for. It's just nothing. You're just throwing darts at a dartboard and hoping for something good to happen. R, risk reward. This is a big one. Okay, let's talk about this. We get stopped out in boot camp at $750 in a loss. Why do I mention this? I see a lot of people all the time during boot camp that take a single trade that somehow stops them out at $750 in a loss. One trade took them out for the entire day. But it doesn't add up when you look at their trade book. They say you look at their trade book and they say, oh, I risk $100 per trade, or I risk $200 per trade. Well, how the hell did you get stopped out in one trade at $750 when you're risking $100 or $200 per trade? It doesn't make any sense. There's something wrong there. Either you got in way too big, or you bag holded, you know, you got into a position, you refuse to accept your loss and you let it go down. So think about your risk reward, make it manageable and make it realistic, but have a risk reward plan. This is my stop and this is where I think I could get to as a target. Trading is really about that Kenny Rogers song. You got to know when to fold them, know when to hold them, whatever the hell he says, know when to walk away, know when to run. That is, as dumb as that country song might sound, that is the essence of trading. You got to know when to fold them, know when to hold them. You got to know when to get out your stop, but you got to know when to hold for like the good move. So you got to be able to do that. So think about that as well. Always obey your stop. I tried to drive this into the brains of my last boot camp. I don't think I was as successful as I wanted to be. Always obey your stop. I don't know if you can hear me banging on my table. When you get to your stop, get the fuck out of the trade. Get out. It's not going any better at that point. You had a thesis. It's broken. It's gone. You were wrong. Move on. You know, you're going to go get the next trade and you can be right. But you will never succeed in trading by bag holding, by holding past your loss. I swear to you, it will not work out. And where it gets tempting is that sometimes you take a trade and you're like, all right, I'm going to get in at 90 and I'm going to get out at 89. And it gets down to 89 and you're like, fuck, I think this is still good. You know, the market looks good. I'm going to hold here. And then it gets down to 88.70, 88.50. And you keep holding and you hold a little longer and you hold a little longer. And then it turns around. And you know what? It does go back through 90. And then it goes to 91 and 92. And you take a big profit on the trade. And you're like, you know what? Fuck that stop. I was right. I knew it. You know what I mean? That's going to burn you over time because there's going to come the trade that's never going to come back. It's not only is it never going to come back, it's going to burn you for like a big loss. Like where like you were getting in at 90 and you're supposed to get out at 89. It's going to go to 74 and you're going to be like, oh shit. Like that's going to take me 4 days of really good trading to even get that back. And you don't know if you have 4 days of good trading coming your way. So just obey your stops. I'm telling you, there's no other way to succeed in this business. You have to do it. And I don't know what else to say about it, but we'll talk about it more as it goes on because there will be those of us who don't do it, and we'll talk about it. Don't overtrade. That's another thing. So we talked about trading your strategy, right? Trade your strategy. Got it. That's easy. But you can overtrade within your own strategy. I can overtrade within high day breaks. As singularly focused as I am on high day breaks, where I say like I'm only going to take things breaking their high day, I can take bad high day break trades. And that's called overtrading because I'm getting into anything that breaks, you know, like the volume's not there and it's not at a good level, it's not at a good price and nothing's going on except that it's breaking this high day. That's me like getting into like, you know, a trade I shouldn't be in. So you can definitely overtrade outside your strategy. We can all do that. Like we can all say like, oh, I meant to trade ABCDs, but now I'm trading all kinds of crap. But even within your own strategy, you can overtrade as well. So look for the good setups. I will not talk about this one too much. Endlessly refine with data. That's what me and Dima were talking about. So the only way to improve your strategy is to gather data and then refine it. You know, put it in a spreadsheet, put it in OneNote or whatever the hell the tool is you want to use. But go back and look at the results and say, like, did this thing matter? You know, like that's the thing. Like I'm still struggling with the idea of whether or not I should trade into the previous day's close for high day breaks. I'm not convinced. I thought that it's a bad idea, but lately it's been kind of an okay idea. I need to gather more data to convince myself whether or not I should trade up into the previous day's close for a high day break. I don't know the answer to that. The only way I'm going to get the answer is to gather more information and convince myself statistically that like, yeah, that's not a harm. I shouldn't worry about that thing, or it is, and I shouldn't do that. So we're going to work on this as well. And then just remember this last thing here, 80, trade 80. 80%, it's mental. It's mental. So we can talk endlessly about, like, I think back to the things I saw on Slack today. We talked about a lot of technical things. We talked about moving averages, and we talked about the tinfoil line, and all kinds of topics came up in Slack today for our group. Just remember, all that stuff we're talking about is 20% of your trading. The other 80% is don't disobey your stop. Don't overtrade. Don't get into a risky trade larger than you should. Don't trade outside your strategy. That's the 80%. That's what you got to really worry about. And as fun as it will be during boot camp to work through the other 20%, because that is fun. I love it. You know what I mean? I like to talk about the tinfoil line. What the hell is that thing? It doesn't matter. Like, you know, that's fun, but the 80% is where we got to apply our brains and our discipline to try to achieve success here. So shit. All right, we went to 6 o'clock, 90 minutes, way too long. Most of our meetings will not go over by this much, but I knew this would happen. But anyway. For those of you still tuning in, thank you very much. Does anyone have any questions or comments? Nothing. You're all like, Jesus, John talked a lot. Okay. All right, guys. Take it easy. Have an awesome night. I'll see you tomorrow in the markets. And trade safe. Remember that trade 80.